Meet Harry. 3 months ago, Harry was scrolling through defense news, watching another $2 billion contract get awarded to Lockheed Martin. Stock price? $400, way out of his reach. But then Harry discovered something that changed his entire investment strategy. 3 defense companies, all trading under $10, all positioned to benefit from what the Pentagon just classified as the biggest shift in military procurement since World War II. Today, Harry's sitting on gains that would make most Wall Street traders jealous. But here's what keeps him up at night. The grand payoff hasn't even started yet. Because what Harry found wasn't just 3 stocks. He found 3 companies that are about to become the backbone of American military power. And the best part? You can still get in before the institutions catch on. See, while everyone's been chasing overpriced AI stocks and crypto moonshots, something massive has been brewing in the defense sector. The Pentagon just made 3 announcements that will reshape the entire industry. First, drones are now classified as consumables. Think about what that means for your financial planning. Instead of buying one drone for $50,000 every 5 years, they're now ordering hundreds, monthly. Second, all military technology must be American-made. No more Chinese suppliers, no more foreign dependencies. Third, cybersecurity is now considered critical infrastructure, which means unlimited funding. Defense spending just hit $850 billion. But here's the curiosity gap most investors miss. The biggest gains aren't coming from the Boeings or the Raytheons. They're coming from the small companies. The ones under $10, the ones building the technology that will power the next generation of warfare. Battery technology that doubles drone flight time. Autonomous drones manufactured in America. Cybersecurity infrastructure that protects it all. I've found 3 companies positioned perfectly for this shift. Companies that could deliver the kind of returns that accelerate your path to financial independence. But there's a warning you absolutely must hear. And if you ignore this warning, you could lose everything. Company 1. Amprius Technologies. Detailed analysis. The first company is Amprius Technologies, ticker AMPX. Current price, $8.66. Now, you might be thinking, batteries in a defense video? But here's what you need to understand about modern warfare. The military's drone problem isn't the technology, it's the power. Traditional lithium-ion batteries die after 30 minutes of flight. That's not enough time to reach a target 200 miles away. It's not enough time for 8-hour surveillance missions. It's not enough time to change the outcome of a battle. Amprius has developed silicon anode technology that delivers 450 WHK compared to the industry standard of 250 WHK. That's nearly double the energy density, nearly double the flight time, nearly double the military's operational capability. But here's the payoff that has me excited. They just secured a $15 million purchase order from an unnamed UAV manufacturer, delivery scheduled for the second half of 2025. This isn't just revenue, it's validation. It's proof that their technology works in real-world military applications. Wall Street analysts have a consensus price target of $10.20. That's 18% upside from current levels. But here's what analysts might be missing. Q1 revenue jumped 383% year-over-year to $11.3 million. And get this, 83% of their revenue now comes from outside the United States. That tells me 2 things for your investment portfolio. First, global demand is exploding. This isn't just an American military story, it's a global defense story. Second, they're diversifying away from government contracts, which means more predictable revenue streams and less political risk. They've also secured their 10th collaborative program with the Department of Defense, including a $1.9 million contract specifically for developing 500 WHKG batteries for military applications. This isn't just a battery company anymore, it's becoming a critical supplier for the future of wealth building through defense technology. But here's the building block that could accelerate these gains even further. AeroVironment, one of the biggest defense contractors, just partnered with Amprius. They're integrating these batteries into high-altitude platforms for government customers. When a $4 billion defense contractor chooses your technology, that's not an endorsement. That's a validation that you've solved a critical problem. But before you rush in, you need to understand the cash burn risk. They're currently unprofitable and burning approximately $14 million per quarter. They recently raised capital through equity offerings, which means dilution risk for shareholders. This is high-risk, high-reward investing. perfect for asset allocation strategies that can handle volatility. Company 2, Red Cat Holdings, detailed analysis. The second company is Red Cat Holdings. Ticker, RCAT. Current price, $9.56. Red Cat makes military-grade drones, but not the drones you're thinking of. These are precision strike platforms. The Black Widow, the Edge 130, the Fang FPV drones designed for what the military politely calls kinetic operations. Here's the curiosity gap that most investors are missing. Red Cat just won something that could change everything. The U.S. Army's Short-Range Reconnaissance Program. This isn't just a contract, it's a program of record, which means sustained, long-term demand for potentially thousands of units. But here's what gets me excited about this investment opportunity. Remember that Pentagon reclassification I mentioned earlier? The Pentagon's new policy treats small drones as consumables, like ammunition, like fuel, like equipment that gets used up and needs constant replacement. Management guidance for 2025 is $80 to $120 million in revenue. That's a massive jump from their trailing 12-month revenue of $2.3 million. Financial analysts have a $13.60 average price target. That's 42% upside from current levels. But here's what could make that target look conservative. The company divested its consumer segment in February 2024 to focus entirely on defense contracts. This wasn't a retreat. It was a strategic pivot toward higher-margin government-backed revenue streams. They're also expanding into unmanned surface vessels, maritime drones for naval operations. This diversifies their passive income streams across multiple branches of the military. But here's the building block that could be the real catalyst. Red Cat is NDAA compliant, built in America, at a time when the Pentagon is mandating American-made drones for all military operations. This isn't just about patriotism, it's about national security. Chinese-made drones represent a massive cybersecurity risk. The military can't afford to have foreign governments potentially controlling their surveillance platforms. Red Cat's domestic manufacturing creates a competitive moat that foreign competitors simply cannot cross. They've also partnered with Palantir for advanced AI navigation systems. When a company valued at $50 billion chooses your platform for integration, that signals something significant about your technology's potential. But there's a legal risk you absolutely must know about. Red Cat is currently facing a class action lawsuit from Carisdale Capital, a short-selling firm that's questioning the reported size of their Army contract and their production capabilities. The deadline for lead plaintiff applications was July 22nd. Multiple securities litigation firms have launched investigations. There's also significant insider selling, over $21 million worth of stock sold by executives in late 2024. This creates both risk and opportunity. If they can prove their production capabilities and deliver on their guidance, the stock could surge. If they can't, it could crater. High short interest at 18.75% of the float suggests the market is divided. That's exactly the kind of environment where informed investors can profit. Company 3, Allot Ltd, detailed analysis. The third company is Allot Ltd. Ticker, ALTI. Current price, $9.75. Allot is an Israeli cybersecurity company. But they're not competing with CrowdStrike or Palo Alto for enterprise customers. They protect the telecommunications infrastructure that everything else depends on. Here's what makes them crucial for your financial planning. Cyber warfare is now the primary threat vector in modern conflicts. When Iran retaliated against Israel earlier this year, it wasn't with missiles or ground troops. It was with sophisticated cyber attacks targeting critical infrastructure, power grids, communication networks, financial systems, the digital backbone that modern militaries depend on. Allot's technology protects over 500 mobile, fixed, and cloud service providers globally, including major telecom operators in Europe, Asia, and the Americas. They just signed what they call a landmark deal with a Tier 1 European telecom operator, valued at tens of millions of dollars. But here's what makes this more than just another cybersecurity company. Their security-as-a-service, SaaS revenue, grew 49% year-over-year to $5.1 million in Q1. More importantly, their annual recurring revenue, ARR, from these services increased 54% to $21.2 million. That's the kind of predictable, growing revenue stream that creates sustainable wealth-building opportunities. Q1 revenue was $23.15 million, beating analyst estimates of $20.20 million by 15%. They also achieved something remarkable: positive operating cash flow of $1.7 million in Q1. For a growing technology company, that's a significant milestone toward profitability. But here's the building block that makes this opportunity special. They just completed a $40 million share offering and used the proceeds to eliminate $31.41 million in convertible debt. Zero outstanding debt. Clean balance sheet. Positive operating cash flow. This gives them the financial flexibility to invest in growth without the burden of debt service. It also eliminates the uncertainty that convertible notes create for shareholders. Northland Securities raised their price target to $15 with a buy rating. That's 54% upside from current levels. But here's what could make that target look conservative. Verizon just launched a mobile cybersecurity service powered by Allot's technology. When a $150 billion telecom giant chooses your platform, that's validation of both your technology and your business model. They're also expanding into 5G security as telecom operators worldwide upgrade their networks. The global 5G infrastructure market is expected to reach $330 billion by 2028. Allot's positioned to capture a meaningful share of the cybersecurity component of that massive investment cycle. The company's focus on network-native security, protection built into the telecommunications infrastructure itself, creates a competitive advantage that software-only solutions cannot match. The Department of Defense just made its biggest procurement shift since 1950. Drones are now classified as consumables, meaning they'll be ordered like ammunition, frequently and in bulk. All critical tech must be built in the US or by allies. And telecom infrastructure is now treated like military bases, with funding to match. These are mandates, not suggestions. Backed by $850 billion annually, plus an extra $150 billion approved through 2026. Specifically earmarked for Amprius, next-gen battery tech. RCAT, autonomous drone systems. Allot, military-grade cybersecurity. This is targeted, policy-backed investment, not hype. But the risks are real. Amprius burns $14 million per quarter and may face dilution. RCAT is under legal scrutiny with a short report challenging its Army contract claims. Allot just diluted shares with an $8 offering, though it did clear its debt. None are blue chips. All are volatile, high-risk bets. That's why Harry only allocated 5% of his portfolio, evenly split, and committed to an 18 to 24-month hold. These aren't random stock picks. They're a thesis, a bet on how the next generation of warfare will be powered, manufactured, and protected. The Pentagon has spoken. Congress has funded it. The only question left: will you be positioned before the grand payoff hits? Because Harry doesn't just see 3 cheap stocks. He sees the future backbone of American military dominance and his ticket to financial independence.